Robinhood has been consistently climbing for well over a year now. It's in a golden crossover on the EMAs, and speaking of the EMAs, it's well above all of them. This is a golden momentum stock, but is this stock starting to look overvalued now? According to the analysts, the average say this stock looks overvalued, but the high side suggests there's a potential 25% upside. So this does beg the question, is this a stock in which you can momentum trade and capitalize on, or should you be selling your position right now? In this video, we are going to be getting into exactly this. So the way this is going to work, we are going to be looking at the actual fundamentals of Robinhood, what might make them pop, what might make them drop. We're going to be looking at that straight away, but then after this, we're going to be looking at intrinsic valuation, analyst estimates, and what actually could be driving this stock going forward. So why on earth would we choose to invest in a company like Robinhood? Well, it's disrupted traditional finance by offering zero commission trading before anyone else could in their field. They turned Wall Street into an app, made it social, gamified, and accessible, especially for younger traders. With a market cap of $10 billion US, 23 million funded accounts currently on this application, and revenue sources from equities and options, cryptocurrency trading, income on user cash, and Robinhood Gold subscriptions, Robinhood certainly looks to be set up in a sustainable approach for the future. This is all, of course, down to one man, the CEO, Vlad Tenev, and he's quite the figure, so let's really break him down and understand the pros and cons of him being the CEO. Well, he, of course, took zero commission trading to the mainstream. He survived a reputation nightmare after the GameStop saga in 2021. Which, of course, is not obviously a good thing, but he did survive it, which is positive to an extent. He pivoted into crypto, retirement accounts, and international expansion, which is really, really strong for Robinhood. And for the weaknesses, of course, he has had a lot of antitrust placed on his head due to the 2021 trading halts. He has been accused of gamifying investing and encouraging risky behavior, and his leadership still feels reactive rather than visionary at times. But credit where it is due, Tenev has focused the company's post-IPO and is pushing for profitability, growth in net interest income, and reduced reliance on volatile crypto volumes, which of course is exactly what you want to see for a financial stock. So where on earth is Robinhood actually heading? Well, long-term vision, Robinhood isn't just a trading app anymore. Robinhood's crypto wallet now supports Bitcoin, Ethereum, and many other altcoins, which of course, again, leads to the gamifying aspects, but for the company, it will obviously generate a lot of income. They rolled out self-custody wallets with growing adoption. Robinhood is quietly becoming a low-fee crypto brokerage alternative to Coinbase, so they will be taking a lot of this crypto market as time goes on and crypto just begins to expand further and further. Robinhood is trying to become a financial super strategy app. They are building out features like IRA, retirement accounts, stock lending, recurring investments, and cash management tools. They are, as well as this, internationally expanding. Robinhood is expanding into the UK and EU markets ripe for distribution, as a lot of European investors are trying to find a solid broker to really invest through. We won't get into that, but they do obviously have a lot of competition here, such as Revolut, eToro, Coinbase, and Trading 212. But in my opinion, Robinhood already has the brand recognition, and I do think that they will actually do really well in the UK and EU. And it is something in which, when it is fully here, I could potentially be moving over to Robinhood. So that's just the positives. What are the negatives? Well, there is, of course, regulatory overhang, the PFOF. The payment for order flow is under scrutiny. The crypto volatility is a major factor that will basically lead Robinhood's revenue to dip up and down. User churn post-pandemic trading boom is now definitely over. Active users are actually slowing now. They are definitely down. Monetization challenges for most users are small-scale investors, limiting revenue per user. So it does look to be as if Robinhood is set up in the perfect position for the future, but there is a lot of things in which their success will depend on, and these are essentially placed into three categories, and that is regaining user trust, sustainable crypto expansion, and of course not promoting stupid meme coins, and executing on becoming a true super app. So what realistically can we see for Robinhood on a financial and intrinsic valuation for this company? Well, if we look here on a retention rate, Robinhood being the fintech company in which it is, currently has a mean retention rate of 34.6 over the last 5 quarters. Now that is absolutely incredible to see it that high. That's really impressive, but of course their margins are extremely favorable, of course, being as they are a fintech company. So looking on a liquidity ratio, this is where it just continues to get better for Robinhood. They have a mean liquidity of 6.56, which essentially means for every dollar in debt in which this company has owed over the last 5 quarters, they've had around $6.56 of liquid cash to pay this $1 back in. So again, extremely positive. So if we actually move on to their free cash flow here, we can see that this is relatively unstable. It's consistently positive apart from the recent quarter, but in my mind that isn't really a cause for concern. When we do look at their liquidity ratios, it's not looking as if this company is suddenly going to drop off the face of the planet and go bust, which is exactly what we do not want to see, which is obvious, of course. Looking here on a 365-day exponential moving average, we can see that we are well above the EMA here, but again, you are obviously going to expect that when the stock has been rallying for over a year. The volume is correlating relatively nicely, but previously over the last couple of months we haven't actually seen it correlate a massive amount, which could indicate that this recent price hike isn't actually as supported as you would imagine. But again, I'm not massively concerned about that because of the time frame in which this has been executed over. It's been a very long bull run. So if we do look here as to whereabouts, we can see this company on a positive ratio of daily returns. If you have been in this stock for the last for the last year, you will have seen 58% of those days return you a positive return, which is essentially, according to this, anything above 1%. Obviously, there's micros in between that, which is the neutral, but we'll ignore that because it's boring. And the probability of a negative day has only been down at 33%. So what can we really take away from this? Well, it basically says that the probability of a positive day is incredible, but can we really project that to future results for this stock? Well, possibly not, because of course we have seen this absolute huge rally now. But again, that is incredibly hard to actually place forward and project because it is pure just uncertainty. But if you do want to really understand where this previous history can take us, then that could be a really good indication, but I wouldn't base too much off of that because it is just pure, not speculation, but could be obsolete if it just doesn't continue to follow that trajectory. So here on the company's current figures, we've got a price to earnings of 47, which in my opinion is on the higher side. I probably wouldn't be buying in at this level in my opinion, but it is certainly a sustainable PE in my opinion. If you were momentum trading this, I don't realistically see an issue with buying in at this level, but if you were in this for the long term, I would like to see a bit more stability in their price to earnings, but again, nothing to cause concern. The 52-week high is $85.55 and the low is 13.9. So massive congratulations if you got into Robinhood at this point, and the beta of this stock is 2.29. With a current earnings per share of 1.75 and a growth rate projected at 17.56 over the next 12 months, we can see that with a surprise rate, this company is actually expected to grow 26%. So where can we realistically say this company should be priced in at currently? Well, looking here on the lovely old Graham's formula, we can see that on the bullish side, the intrinsic value of this stock is $99.38, which obviously is massively above where we currently are at 83. So that warrants a buy, right? Well, not necessarily, because if you want to factor in a margin of safety of 25%, that gives you an acceptable buy price of $74.5, which obviously is way below where we currently are, indicating that it is actually a sell. And if we look on that on the bearish indicator here on the right hand side of your screen, we can see the intrinsic value is set at $54 and with an acceptable buy price being in at 40.5. However, when you are in a bull market, you do tend to look towards the high end of this valuation. So realistically, that is where I would be assuming the stock should be aiming for in this recent hype cycle of the stock jumping up massively. And for if you want to see that visualized, it would be around the level here. So there is still a lot of my head's in the way, but there is still a lot of potential growth within this stock to get to the level of 99. So price targets for Robinhood, well, based off of 22 analysts, the general consensus is this stock is a buy, with 10 putting this in at a strong buy, 5 at a buy, 6 at a hold, and 1 at a strong sell, with the average price target coming in at $66 and the high of 105, with the low being at 43. I think it's fair to say, in my opinion, this is a slight buy. It's a buy for a momentum trade. I've been in and out of this, so I bought in roughly around the $46 range. I would have bought it further back, but I just wasn't aware of it at the time, and I rode that all the way up to around this $74 mark, and then I was out whilst it was moving sideways because I was really unsure where the stock would move, and I did actually jump back in when this candle appeared here, which jumped us all the way up to $76. So, and from there it has continued to go up. Now, I am aware that by the time this video is out, this might be slightly obsolete, but I really do doubt it will be. I am away on holiday as this video is out, so I do apologize for the slight obsoleteness of it, but it should still be very relevant if this uptrend does continue. So one of the important factors for Robinhood is it is well above its 150-day EMA, indicating that a lot of momentum is stored underneath this stock, and big money will they won't be reluctant to get into a position because it is obviously supported. So that is definitely an important factor. And if we do go off of our rule list, we want the stock to be above the 150-day EMA, which is definitely a tick. We want it to be in a bullish golden crossover, which it also is. It's been in a bullish golden crossover since around February 2024. So again, that is where you want to realistically enter into this stock, but unfortunately for me, it wasn't on my radar at that time. But again, it looks to be meeting all of the parameters in which I set for a successful buy-in, apart from, of course, the average analyst putting this in at a 20% drop from the current price. So there is certainly an element of risk within that, and that's where I essentially draw the line. I think that this stock could reach the level of $100. It has now surpassed its all-time highs back when the stock was premiered. So it looks to be as if this will just have momentum all the way up to the $100 range, and from there, who knows, it could push through, but most likely, in my opinion, I think it will see a large level of resistance and it will fall straight back down, especially as it meets up with the maximum or the highest price target there. And for me, I don't see that being massively sustainable, especially when you look at the actual volume correlation within this recent price hike. I don't think it is actually as supportive. But when we do look to their current peers, such as SoFi, I know it's relatively different companies, but fundamentally they're semi-similar. This stock is also now rallying. Thank the Lord. It's about time SoFi did well. And to be fair, it's really impressive to see. And it's exactly what you want to see, as when these sectors do climb up all together, it certainly boosts each other, such as when Nvidia climbs up, AMD will most likely climb up, Micron will climb up. You want to see these sectors moving in harmony, and that is kind of what we're seeing at the moment. So for me, Robinhood, certainly a buy. Want to certainly put stop losses in place with, because there is a potential that this is not as supported as it looks on face value, but it could certainly go a lot higher from here. I've said certainly way too many times in this clip. So that is Robinhood. They are my fundamentals and what I think about this stock. Great stock, and one to certainly watch or potentially buy into for a momentum trade. But of course, this has not been financial advice, and if you do invest into the stock, your capital will be at risk. My advice, which isn't financial advice, is to put stop losses in place. It will certainly stop you from losing a large chunk of your portfolio when, of course, this does fall down, because nothing can climb forever. Stocks take the stairs up and the elevator down. Once this is up, it looks, oh, wow, this is nice and healthy, and then all of a sudden you've you've lost your money. So please do be careful with these stocks, because especially when volume isn't correlating as nicely, it certainly looks to be relatively overbought. And if we do actually quickly look at the overboughtness of this stock, what can we really see? I imagine, yeah, so currently it's at 73. So on the RSI, it is overbought right now. So we can possibly expect somewhat of a pullback, but this stock does look to be somewhat healthy in a overbought territory, which is, again, pretty weird. So I hope you have enjoyed this video and found it somewhat useful. Again, apologies if this is somewhat obsolete by the time the video comes out. I am away as of the release of this video, so please do hit a like and subscribe. It would be greatly appreciated. Join my stock analyst army or empire, and I will see you for the next video.